I want to welcome everybody back from lunch as you guys file in and grab your seats. Thanks for joining us this afternoon and all day here. We're looking forward to an afternoon with 2 sessions, with a lot of content, a lot of great speakers, really interesting perspectives, and we appreciate everyone coming in and finding their seats right now. I'd like to introduce, just before we get to these sessions, an industry visionary, a leader amongst us, Blaine Cook, President and CEO of Montage Financial Group. Blaine, please come on up. Thank you. You can stay here. If you want to walk around, you can use the mic too.
That's okay. Good afternoon. I'm just here I'm from Montage Financial Group. We have a provider in Southern California. We've done trades with most of the people that I know in the room here. I'm just here to introduce the panel for this afternoon segment on life settlement process standardization. We would really like to make this interactive with you guys, as I've talked to the panel earlier today and last week. Your moderator is going to be Chris Wells. I want to just give you a little bit of background on Chris. Chris is part of ELSA, the European Life Settlement Association. He's the executive director of ELSA. He's also the managing editor of Life Risk magazine. He has a lot of duties, as we all do in this industry. He also facilitates the Secondary Life Markets Conference and Life ILS Conference. So he's a busy guy doing a lot of things. His focus, I believe, in ELSA is to really promote the life settlement business as it is in the European countries, and to actually give it a good face. He teaches best practices. He does lots of analytical work in conjunction with ELSA for it. He also does conferences for members of ELSA, but he also does conferences and a way for them to all interact and network together, but he also does it to industry-wide people that are looking to get into the industry and so forth. He's been in the industry for about 10 years. He's done a variety of jobs in the industry. He's been up and down the whole chain of trading the product and making sure the trades are done properly. So he's very conversant with the space in life settlements. He's done schooling in the area of economics. He's got a bachelor's degree in economics, but he's also done postgraduate work in gerontology, if you will, from King's College in London. But he is our moderator for today, and that's Chris Wells. All right. Secondarily, we have on the panel John Mendelson. I'm familiar with John. John has done many trades with Montage Financial Group over the years. John's leadership and his team, he's a very innovative guy. He and his team are very innovative in the way they look at this marketplace. They're willing to take risk and look at different ways to do things. And quite honestly, John has done a great job for us in our trades. He makes it a really great client experience. We've had a great chance with my staffs, both our staffs, have had a chance to interact with one another and really talk about trades and strategies going forward, not only as a broker, but also as a provider, and also for the investors, the best way to do that. So he's been a really great help in helping us developing our business, but he's also done a great job in integrating things for the secondary market and the tertiary market. That's our first panelist. The next panelist is Stephen Shapiro. Stephen is the founder of Q Capital, and he founded that in 2003. He also was involved in Mark Partners in 2001. He was the president of Mark Partners. He has extensive experience in private equity, investment banking. He's got a really fine financial background. Stephen and I's lives have touched off and on over the years. We've done a number of trades together with Stephen, worked together. He's a great guy to work with. He's also worked with Blackstone. He's also worked with Center Partners Management. He also graduated from college. Wow. And he went to University of Pennsylvania. Just playing. I'm playing with him because I know him. University of Pennsylvania in economics, but he also went to the Wharton School of Business and graduated there with I think it was a degree in entrepreneurial management, which it's another name for an MBA, I guess. But and he was also the LISA chair for a while and is now still on the LISA board. But that's our third person on the panel here today. And the fourth one is Amy Bessie. And she works for Air Asset Management. Her credentials are off the charts. I don't know how else to describe her. She's like the compliance guru of the world, I think. She's done a lot of work in the compliance area. She's also an expert in human resources. And she's just looks like she's done a great job. She's working with them in the capacity. She's a member of their executive committee. She's a member of their investment committee. And she's also a member of their ESG committee. So she must be a very, very busy lady, as far as I can tell. She has about 10 years experience working with the SEC and also working in FINRA. She's got too many series licenses to almost mention, but I'm going to do it anyway. She has a 24, a 27, a 63, and a 79. So she's to be congratulated. That's maybe higher than I can even count. But she's got an amazing resume and background. She started her financial career in, it looks like she was working in a nonprofit. I think it was a biotech company, if I'm not mistaken. So she's familiar with not only the life side of things in this industry, but she's very familiar with the finance side of these things in this industry. She's got a BS in biology, and she also has an MS in cellular and molecular biology. Wow. Great degree. And she has an MBA from Washington. I'm not sure if she's going for a PhD somewhere else, but she's well qualified to be on this panel. I thank you all for being here on this panel. This should be a lot of fun, actually. Can't you just love compliance? Can't you just love how we can get through all these things together? But it's a great panel. I'd like you to all welcome Chris and the panel as they come up right now.
Thank you, Blaine. That was fantastic. Can you all see me over this podium here? Just about. All good stuff. As Blaine mentioned, we're going to try and make this as interactive as possible. I like it towards the end of any conference, people start getting closer and closer towards the back. There are none of these tables in the middle taken at all, but don't let that make you shy. I do have a load of questions here, but my preference really would be to get questions from you in the audience and get some dialogue going between the panelists here. So, Blaine, thank you for the introductions. Just wanted to kick off with really saying that standardization is tough. And I fully understand that, particularly from a trade association's point of view, it's one of the pillars of what we try to do. But actually, what we're really asking you to do is change your processes, change your documents. Then we're asking you to make the lives of your competitors easier. And that's a difficult ask. But also, standardization solves inefficiencies, and inefficiencies create costs, and one person's cost is another group's revenues. So really what we've got to demonstrate to you guys is actually by working together, we can grow the pie. And that's what we're going to be talking about today, is really what inefficiencies are there, how can we make everyone's lives easier, and how can we make the market bigger. So starting with that, we're going to talk really at the beginning of the value chain, and I'll let one of you volunteer for this question. What are some ways that providers and brokers can reduce the time of the policy sales cycle from initial offer to escrow closing?
Do you want to start? Yeah, I'll jump in. And
can you hear these work? That one's working. Is yours working?
yeah, there it goes. Thank you. So to repeat the question, can you say a little bit louder again?
Yeah, of course. So what are some of the ways that providers and brokers can reduce the time of the policy sale
Okay.
up to closing.
To reduce the time, I mean, obviously it's get as much information up front as we can to determine if the range of value meets, everyone's expectation level. We're not in the business of just gathering information for future opportunities, although that's still a good concept to have for future potential business. But if you're talking about right now revenue and right now solutions to help the client, how quickly can you gather information, efficiently from the carrier or from a medical perspective, and to be able to communicate, to both the client and then of course where the buyers are today, so they prioritize the policy over others. So I would say our biggest challenge is how quickly can we gather that in a responsible way, and get it in front of the right buyers, those that do their own view potentially as well, so they could bid faster and respond sooner.
Yeah, I think this is a great area to focus on, but I kind of divide it into two categories. And the bar for this is quite high because we have, Americans are used to instant gratification. That's what we're all taught our whole life. We want this cup of water. It should be right in front of us when we think about it. And so every day that passes through the process of a life settlement that it's not getting done, things are dropping out of the funnel. And we all talk about the need for supply of policies. Well, this is a key piece of it. If we could put this, make this process half as long, there would be more policies to buy because less policies would fall out of the system. So I kind of break this into two pieces, things that are in our control and things that are out of our control. And I'll start with kind of the easier one since it's out of our control, and I view this as a real opportunity as members of this industry working with our trade association, with LISA, to help us with these issues. So things that are out of our control would be collecting medical records, particularly dealing with carriers. Obviously, Alan spent a lot of time talking about how friendly they are to us. And those are hard to really work on. And frankly, they're getting worse as opposed to getting better. But that's where I think the industry and all the people in the room working together with LISA, we can be effective at trying to lobby to get some standardization within state rules of when carriers have to respond to requests. I mean, this is the kind of thing that seems pretty basic, but it doesn't exist anywhere. Maybe that's something we should be focusing on as an industry, trying to work at that angle instead of 70 companies individually trying this, working together with LISA. Illustration requests and requiring certain timing for change forms, things like this. So I think some of those things that are out of our control, which we all bang our heads against a wall on and are so frustrating, it's hard for us to individually attack these, but crucial that we do. And then you get to the things that are in our control. And I think each part of the process, what we have to take a step back and realize is that, okay, me as a provider, when I get the case from John Mendelson on day one, there's already been 30, 60, 90 days of effort going on, sometimes years. Yeah. It could be a long time. So we have to keep that in mind. Again, going back to that premise that every day that passes that the transaction didn't get done is a day that it could fall through the system. And make sure we're working and communicating continuously with the people we're working with our suppliers, with our partners, with our clients, what's needed so that things don't, the worst time something can get bogged down is at the end. When you're there and everyone thinks everything's done, we needed a divorce decree here. Well, it would have been great if that were anticipated, communicated to the provider by the fund, from the provider to the broker, or if the broker, got that up front, that's ideal. So I think that, kind of standardizing and getting together as an industry, like, okay, let's have a checklist of everything that we potentially need, and let's follow through that checklist and make sure it's being tracked every step of the way from the beginning, because, again, the goal really is to get as much time out of this as possible, because we go back to that instant gratification, and we'll see this when we're, most providers have some direct business they're working on today, so we see it directly when we're working on the direct side that, people just get fatigued. I know that's your favorite word, John, on this process. People get fatigued, and we have to prevent that fatigue. So I think those are the key issues that we need to work on as an industry. So it's divided between things that we can anticipate. We've been doing this for a long time. It's the same thing over and over again. So we really know what we need. And then working together as an industry through someone like Lisa to coordinate and have efforts as an industry together to work on some of these things that kind of fall out of our control that we should take control back from. It was a long answer, but
Yeah, and I just want to touch on something. So when you say take control, let's talk about low-hanging fruit here. What can you immediately identify that you feel that Lisa or Elsa or group can coordinate where we can solve a single problem?
Well, again, I think it's the couple things that I mentioned are we've talked about lobbying for an updated model act that could bring a little bit more consistency, and I don't want to touch too much on secondary contracts because that's the next panel, but that's kind of falls into that category. But having consistent regulations so that the work can be modeled standard, things like consistent rescission periods. So there's still some states that have 30-day rescission periods versus this kind of standard 15-day. And, that 15 days makes a difference. It makes a difference. So, working on a new model act would be a great start, and working on some kind of framework for lobbying states to, kind of get things passed that would require carriers to respond to consumer requests or owner requests in some timely fashion.
And Amy, from the buy side, how candid can we be, should we say? You've got a broker and you've got a provider here. What are your frustrations, shall we say, when dealing with a transaction that's taking a particularly long time?
I think it really boils down to information. When we get a file and we've got a block that we're going to buy, we may get towards the end of the transaction and say, oh, we don't actually want to buy this policy. It doesn't have the LE we thought it did. We need to pull that one out, and is there something else we could buy? So really, I think having maybe a standardized list of what to expect to have at the end of this process for the buyers would be very helpful. And if there was a universal Lisa list of things that we would like to see from the buy side, I think that helps the process, because at the end of the day, that's the consumer market.
Can I come in here with a quick
Of
plug
course,
for you?
yeah.
Well, I think, look, one of the good things that has taken place, and that, Amy, kind of what you're speaking to a little bit, is on tertiary side, I think we have made really good progress on the tertiary side. And Chris, your organization at ELSA released the most recent version of the MAT, I think 2017, am I correct? And we've actually used it in a number of transactions, and it's made a big difference in the tertiary market as far as standardizing the contract and making, most people are asking for the same things, and the difference is transaction to transaction can be handled by this, the statement that kind of goes at the end of the contract, but I think that's made a big impact, and I think, I would encourage more people to look at it and to evaluate whether you can operate on that in tertiary transactions, because we found that to really speed up the process.
Yeah, I would say we kind of divide the transaction to simplify it for the distribution side, the client, that like every story you have a beginning, a middle, and an end. And if we're working towards the end from the start, we've understood this better, I'd say more over the last 5 years than we did of our previous 15 years, that we need to be building that closed file from the start. It shouldn't be a mad rush, at the end. That should be happening. If we know there's a divorce, we need to get that divorce decree early. If we know a partnership split up, we need to start getting the right documentation early. So as we kind of move as efficiently through the process, that's something that it has more of a enjoyable client experience and advisor experience, which means they want to repeat and help this industry scale a little bit. Some of our struggles always come into, it does take time to gather information, or maybe even if I backed it up, to overcome what it takes to explain this process, and how do we show them the proper analytics that's more fact-based than salesy, because they don't want to hear that. So how do we give them that information so then we know we have a client that's really serious about moving forward versus kicking tires along the way, because everyone, will work, off that contingent fee from brokers to providers. So how do we really kind of hone in on who's serious? And then how do we, in that middle stage of the story or middle part of the story, how do we compress response times? It's not uncommon for us to have 2 to 5 days sometimes between bids during the auction process. And everyone, as Steve said, a word I use a lot on committee meetings is transaction fatigue, because many times we've talked to the client for 3, 6, 12 plus months prior to even gathering medical records. So there's a lot to it there. And then once we get to the end, companies like ours might have to have muscle memory on 10 to 15 different buyers' documents. So everyone has a signature and document prep at different places. So how do we make that a little bit more efficient? So we're not taking as much time. And for those advisors that are very active in this space, they get it, they appreciate it. How do we help them? Because now they don't have any muscle memory if every document's different. So I think thinking about this a little bit more from their experience versus just our experience, investors need to be protected. Providers and brokers work their tails off to earn the fees they do and to market to bring in it. But keep going back to focusing on the experience and the efficiency for consumers and their advisors is really what we need, where we need to be. Maybe it's through polling, it's through inserts or questions at the end. What can we do to make this process better for you? What slowed you down, what stalled? So really getting in that. From the room, I would love to hear, if that's okay. We got a lot of smart people here. Where do you see opportunities for, whether it's more standardization that doesn't take your secret sauce, and put it out there, or more efficiency? Are people willing to share any of those types of things? We have those that work directly with advisors and kind of direct to consumers that are experiencing that.
I know it's just after lunch, but I also know you're not a shy audience. So does anyone have any comments there?
Apparently, we're the only two companies
We got one at the back there.
that aren't efficient. Okay, great.
Can't hear.
Hello.
John Collins. I guess one question, because I've been on all sides of this, and really a question for Amy. At the end of the day, okay, I'd like to start off with an oldie, but a goodie. No, from the investor standpoint, when you get down to it, right, so some of the old timers in the room, like me, that have been around when we have hundreds and hundreds, way too many documents in the package. Amy, how many documents do we really need when it's all said and done, right? From an investor standpoint, don't we work our way backwards, because the document package at the secondary market is really to satisfy what we anticipate in future tertiary transactions. So isn't it really kind of the investors the driver of this? And John is nodding his head. You didn't set me up for this question, John, but what are the main drivers? Like, if there's 10 documents, do we really need all 10, or is it really 3,
Well, there's a qualitative aspect to this, not just quantitative. So in some of these, yes, you need if it's been sold multiple times, you need chain of ownership and make sure that's all clearly defined, that the quality of the document is acceptable. Speaking with this panel while we were preparing, something to consider is if you're redacting electronic signature documents and then you scan them, you've just invalidated the electronic signature. So what comes into a package, the aged LEs, the HIPAA consents, there's a qualitative aspect to it of how recent are these documents, and is the insured, are they and their family willing to participate and update LEs and answer the phone. So and is there, a partial ownership that's retained by the family? How likely are they to be litigious to try and get the whole benefit to themselves and say they didn't understand? So there's not just the required contracts from the states and the divorce decrees, and there are these events that will occur that will affect the quality, the quality of the paper, and then the price of the policy as it trades. So there's not one. You have to show the chain of ownership, and we have to be able to go to the carrier at the point where that person passes away and claim the death benefit. I mean, that's, if there's any question as to whether or not you're going to be able to execute and the carrier is going to say we're not paying you, that's an end game. That's a huge risk. It doesn't happen that often, but there are carriers that will make your life miserable. If you don't have the full set of paperwork, you risk spending quite a bit of time in litigation with a carrier.
I'll jump in here for a second. It's interesting because over the last several years, as we've been dealing with COVID, everyone has kind of looked at their business model in every industry and reevaluated things. And I'm glad Amy brought it up because I had a lesson here when we were preparing for the panel. But one of the big pushes we've talked about is and people have tried are electronic signatures. And the rules in many states, and again, this is at one of those state by state. If you're not a lawyer, you're furious because it's hard to figure out and it's expensive to get things done state by state. The acceptance of e-signature or e-notary, notary is really the bigger issue. A lot of those laws were relaxed during COVID. Some of them made permanently, changed permanently, but it is still a state by state issue, and that's one of the things we talk about all the time. We talk about it on the LISA committee, the IAC, where we're trying to figure out ways to be more efficient. But it was fascinating to me, Amy, when we were talking and preparing for the panel. Not something I ever thought of. If you have an e-signature document that you then redact and scan, that it kind of blows up the characteristics of that document. Not something we thought about, but those are the kinds of things that we need to figure out. How do we avoid things like that make it harder as opposed to easier? Because I think e-signature is certainly an opportunity, and people I think appreciate it. I mean, John, I know you and I have talked about it. Maybe you can add some more to this, but that is certainly, for some of these transactions where you have 3 beneficiaries in 3 different states, and the insured's in a different state, and then maybe there's a trustee also. Where you're chasing multiple signatures, many of which need to be notarized, and there's also a question of, do we really still need notaries on all these? Since many places it's really just our own doing. It's not in the regulations per se. But thoughts on that, because I think that is an opportunity for some compression of time.
Sure, and I've had some, and it's probably not limited to me. I'm sure many of you would say, I've sold my house faster than I was able to sell this policy. I've sold my business faster than I was able to do that. We recently had one, and it was a lot of work to gather, a lot of information, a lot of administrative requirements as we go through that, reviewing it all just to see if it even would qualify from just a longevity perspective, because they were a little bit younger. It worked. That worked out. We kept moving forward. By the time we get through the response time of many times, 1 to 2 to 5 days by certain groups, and then we went to contract, there were 4 policies, and there was almost 200 pages of documents per policy per contract. And the beneficiaries, there were multiple different or trustees in different states. I mean, we literally, as we're going through this, we had 1,000+ pages, and the buyer's like, can you get this thing back quickly? I'm like, no, they're not getting this back quickly. Their attorneys are gonna dig into this at such a high level, and we've all heard the conversation, gosh, this is a little bit more extensive than I realized that I was getting into. So I think if we can figure out whether it's the immediate contract that everyone and each of the buyers have your own, additions to the contract, but if there was a document that was able to be e-signature, that they can not miss an initial and go through, and we're not doing that, and it moves faster, at least on the core document. Purchase agreement, maybe you have your own. that might be a really fantastic way to limit. I mean, we'll also have a couple $1,000 FedEx bill on that alone by just going back and forth. And it just becomes very, probably unnecessarily cumbersome. And they're like, what do you mean you don't have a DocuSign in this? What do you mean? Like, how do you not have that? It's almost mind-blowing. It feels a bit archaic to them, but imagine if one of you gets a phone call from your parent, okay? So I don't talk about this in trades. That's not language I'm remotely comfortable with or use. That's somebody's parent or grandparent. So if we're working with this client and we're assisting them, and imagine one of you in here have an 80-year-old parent, and they say, I just had 1,000 pages of documents sent. I don't know, they get paralyzed by it, paralysis by analysis. And you wonder why the documents don't come back. We need to find ways to make it more efficient. Just once again, from gathering it up front, maybe relying on RX searches or more leveraged resources that Lisa members we can pull together to get information faster and easier to, life expectancy companies are, they're crushing it right now, right? I mean, how many times does it take 2 weeks, and they say, well, gosh, you can expedite it and get it in 5 to 7 business days, something like that. But that's another transactional drag or fatigue that I talk about, pretty consistently. There's a chance in every sales process, regardless of this industry, when you have your highest likelihood of success, we blow right through it, then we fatigue people with it until people are slightly irritable. And then they call outside the transaction to test the water.
John, I'm
somewhere
going to
else.
stay away from the secondary market side, the second transaction, leave that to the next panel
Oh, I'm
coming
sure
up.
they're going to be technical.
They're going to cover that as well. But
I'm talking about the experience. They could pull together the best documents they want, but if the response time and experience.
But I just want to touch then in this sort of post-COVID environment, and I want to ask each of you if there's been one particular inefficiency or standardization that you could sort of identify that was adopted and is continuing to be adopted post-COVID. If we can sort of keep answers fairly brief on that one, because I also want to hear from the audience if there's anything they've seen that they've now taken on as part of their standard process that they hadn't done prior to the pandemic.
Yeah, I mean, I think for us, we had, the e-signature, we're not doing it on closing documents yet, or the final closing documents, but at least on things like policy releases and on HIPAA medical releases, we're still utilizing that because it's a much faster way. Again, this is on the direct parts of our business. They're not getting accepted everywhere, particularly, certain medical providers and facilities would rather have a fax still than a DocuSign document or similar. But that's something that we've that we'll continue to do that we were not doing pre-COVID.
Fantastic. Yeah. John?
I mean, I can jump in, sure. I think being able to, everyone, even seniors, are a little bit more comfortable with Zoom and Teams and things like that. That kind of force-fed them to have to get comfortable with it. I think that was helpful. I think it personalized our industry quite a bit. We have a lot of professionals in this room, and we don't have a reputation that I think really meets, the hard work that we do. Sometimes they only think about the bad actors or stories they've heard about our industry. So I think post-COVID, everyone is using video a lot differently than we ever did before, and they're saying, gosh, they're a really professional firm, and they're helping us do that. So I think that's helped dignify our business differently in ways that we possibly didn't have that previously.
I think one thing that did change as COVID set in was we found that through the normalization of Zoom and Teams, that our sales team could meet with investors virtually and do virtual conferences and still successfully raise capital. And so it has increased the capacity of our sales team, not doing individual meetings in person as it's been done for a long time. And there still is some of that, but people are now okay with a meeting virtually. If there's not even a discussion of, well, you're in Dubai and we're in Chicago, and we'll plan a trip and meet. We're able to do some of that over Zoom, which is interesting.
Thanks. And I'm intrigued from the audience as well if there's anything they've identified that's sort of come up in sort of procedural, even documents or processes. Question.
I know one of the answers is better than the other. So we're talking about standardization, speed, ability to take, close, and learn. Why is it that allows some people to pre-fund, not having the documentation ahead of time, and make that execution of the utility might sooner, and then clean up the rest later? How does that happen? Why can't that happen in every transaction?
I mean, to me personally, because obviously I experienced that. That's the kind of the part of where we sit. I think it's really a question of risk and allocation of risk and what level of risk you're willing to take. I think that's actually an interesting area where we could, do some lobbying for, because again, the laws as a provider when you're buying that policy, and I assume you're talking secondary, because tertiary, because tertiary it's not really as much of an issue, because one of the things we have done, again, I think we should take credit where credit's due, and with securities intermediaries involved in almost every tertiary transaction now, we've taken huge strides to, cut the time down in tertiary. So I think that it's an interesting area where, since as a provider the rules are really focused on consumer protection, there's nothing in there now. But again, I think that's another opportunity for Lisa to be able to allow something like, because of course the risk is the transaction doesn't go through and you've either paid a premium, because again, still in some states like Florida, I know as an example, the rules don't really say that if you pay a premium during the rescission period and the seller rescinds, that you get that back. I mean, you have to kind of ask for it nicely and vaguely, but it's not in the law. So I think cleaning some of that up at the state level would be really helpful, because if the risk is if the transaction doesn't close, I want to be able to be confident that I'm getting my money back. And I think now, for the people that do that, and there are a number that do, it's kind of, you're working with sugar and honey, and then maybe you're moving to hemlock eventually, and getting a little bit more aggressive. But it's a great point, because I think people, if you can get that done in a way and people get comfortable with the risk, you can do it. Again, for me, if I'm just doing it as a provider and it's not my capital, I can't make that decision for Amy. Amy's got to make that decision for herself or whomever the buyer of the policy is. I see Scott's got his.
Yeah, I think it's worth risk, right? And to John, your question, Amy wants to see everything, right? I mean, she wants to see everything.
My question is, sorry, so the more documents you put in, the more documents that will find their way not in the file, in tertiary, and Jan's.
Well, and
you identify the risks early, you can streamline it out.
And that's where we struggle, is that we know Amy wants certain things, and I want things because I'm also a party to the contract. But, the last two lawsuits we're involved in had nothing to do with a divorce decree or an LOC or bankruptcy discharge or Benny waivers. So it's funny that we layer all these things in the contracts. I don't know how often they become risk, but we do it because we're afraid of the risk. And we're hardwired to do everything because that's just on our normal closing checklist now. But I mean, I think it is about what the buyers want, and can we ever eliminate half the stuff that's in our contracts because of the risk factor you mentioned, Steve.
Yeah.
But we've all had contracts where we're fighting the Benny waiver issue or corporate doc issue or all those things. So, I mean, I know the next section talks about standardized process, but it's the closing and everything that we're just hardwired to get becomes the issue, right? There's just so much stuff that we got to get this now, we got to get this now. Smoking affidavits and whatever the lists are. So, I'm not sure, Amy, where do we go from there? How do you as a buyer, where are you happy eliminating certain things like that?
Well, I mean, I'm a compliance officer, so I want all the risk covered. But it ultimately comes down to, can we sell it with the set of documentation and show the chain of ownership? when the person passes away, can we or the buyer go to the carrier and have an ironclad case? Because the attorneys at the carriers would love to say, aha, look, you are missing this document and therefore your claim is invalid. That's really the end results that we need, is a case that is basically going to be sound, so that every time they say, well, you know, you don't have the smoking affidavit, you can go back and say, but we do have the smoking affidavit, you know, or the, you know, HIPAA release, or any of these things that could cause contestability from the carrier are risks. So each case is unique. You know, you've got, you know, premium finance in there, you've got STOLI, you've got you know, joint survivorships. You've got to be aware of what is in all of these different types of policies and make sure that you have the unique doc set for that individual at the end of the day.
Yeah, I think, Robin, give me 1 second. I know you're right. I think you just brought up a really important point. I was having this discussion with someone very recently, so I'm glad you brought it up. Because I think what's important, and again, this is another thing for standardization, I think one of the things we suffer, particularly if you look at it, again, I think the two things that everyone is most concerned about, there are two things at the end of the day, and Amy just said them. Number one, could I resell the policy if I bought it? And number two, am I going to collect on it? Those are the two things we really all care about. Everything else is, you know, is it STOLI? It all relates to one of those two items, or both of them. So I think one of the things we suffer as an industry, and we've got this word standardization, is there's no industry standard. If we can sit down as an industry, work with the lawyers, and kind of develop this standard, this is what we do, because I think that's a lot, you know, when we face litigation, we get it different ways, but if we were able to say, well, this is the industry standard, this is adopted by Lisa, this is how we confirm this, and if we kind of get our message across, I think we should be on offense as opposed to defense, because at the end of the day, I want to make sure that I'm following the industry standards, but we don't necessarily have one, and so that I can collect on the policy or I can resell the policy. Robin, you had sorry.
This is sort of outside the 9 dots, but there's a lot of smart people in the room. Has anyone thought about having an optional title insurance policy that could be added to the settlement at closing? So where you need the most minimum of information, where maybe you charge an extra I don't know what the number is, but some percent similar to real estate, so that a seller would have the option of with or without the title insurance. So maybe instead of getting, I don't know, 100,000 in 6 months, they might get 98,000 in 6 weeks or something or other. But it would seem to me, now that we know, I would think the same problems keep surfacing in terms of what causes the delay, but the cases that go through fast are relatively similar fact patterns. But if someone could come up with some sort of title insurance for settlements, it would obviously benefit them, but it would benefit the whole industry. And if 2 people come up with it, it would be even better, so we get a little competition going in the price.
So
but
Robin,
seriously,
I think in like 2009, I registered the domain name Q Title Insurance. So it's funny you say that. And last night from the airport, I shared an Uber with Jessie and her colleague Luke, and we had this exact discussion in the Uber on the way back. I think it's a great idea. I think there are a lot of logistics you got to figure out about it, but it goes back to Rob's question, because if you had that, you could pre-fund deals. If you had a way to get all the parties involved, because the challenge again is you need the consumer kind of involved in that process, at least on the secondary side, and have some right to go back to the consumer. I think so. I think it's a great idea, and I think it would be great if we brought that to the industry.
and it seems that they either go through really easily, or there's an issue with not being able to find something or whatever. But they're kind of similar problems when there is a problem. So I would think if all the providers got together and figured out the fact patterns for the routine ones versus what the problems are, maybe there would be a way for someone to come up with some sort of title insurance. And then you give the choice to the seller as I said, would you rather have 100,000 now, or would you rather have 100,000 in the future or 98,000 now? It's up to them.
So we'll go 50-50 on the venture, we'll set it up?
Pardon?
I said we'll go 50-50, we'll set it up together.
Okay, I'm in. Seriously.
But I'll be intrigued from the buyer's side, would that be of interest as well?
Yes, I think that, the more creative that we can get with finance tools in this industry, the better. I mean, flexibility is everything. So, you could, in my mind, potentially increase the value of a policy for us if we had insurance behind it to mitigate some of the risk with the paper.
So quite frequently here it comes up the sort of the issue with essentially the flow of information and data and the inefficiencies that relate to that. I do have a question here which regards to what ways that the provider can work to improve carrier processing and essentially change of ownership and whether or not there's any standardization that we can implement from that perspective. I know, Steve, you had some issues. Comments
Yeah, I
on
mean,
that.
look, I think the good news here is we've made a lot of progress over the years. I remember sitting down, I was working on a deal, a financing deal, and trying to figure out the process of closing a policy. And this goes back, pre-08 financial crisis. And I was sitting in my original office in New York, and anyone who was there, we had a wall that was a whiteboard, which was kind of a new thing back then. Now probably everyone has them. And I remember sitting down with my dry erase marker and going through, I was like, all right, I'm taking all afternoon to figure out what do we have to do to get a policy closed. And I started, and I get all the way, I get to the end of the wall, and I wasn't done. I got out, I ran down the street, I went to Staples, I bought those life-size Post-its, those? I put them all the way along the next wall until I got to the end of the process. And I think the good news is that we've shortened that process, probably only half a whiteboard wall now at this point. And I think, the communication at the end of the process, going back, to the kind of the change forms and so forth, it's really, that I view as kind of a joint venture between broker, provider, and funder. In that, at the end, the most important time you want to move as quickly as possible. And everyone has different points they can push, and we all have to do that and work together. So, a couple days, people, looking at a form, that hurts us. So I think it is a process. Every change form from every carrier is different. They change the forms all the time. But I think as a provider, being up to date, knowing, and as a broker, having the right forms, knowing the right process, what is needed on a particular case, up front can save days or weeks.
And the rather basic question is, why hasn't this happened already?
Again, I think it goes back to this question of standardization. Different people want different things. I also think that, again, I'm going to go back from my banking days, and when you negotiated loans over the years, when you go to close a loan on the last day, they go, oh, we got to take it to committee. Well, when they take it to committee for the approval, it's like a rubber stamp because they've been informing their committee along the way, all the steps in the process, giving them updates. It wasn't like, oh, we negotiated this loan, now let's go introduce this concept to the loan committee, and they take 3 weeks to go review it. And I think we've got to get better at following that first model, which is really being transparent, providing all the information back and forth, working with both sides here to make sure that as we go, when you get to the end, someone's not starting. They're at their end too. Does that sound reasonable?
Yeah, and I just think it's going to take probably a couple of the more leaders, more entrepreneurial providers that have skin in the game, those that might have access or control their own capital so they're not always pointing towards Europe. Those of you that do have some control to be able to just put it to work. Work a lot on the broker side and agent advisor side, moving into more of the fiduciary markets that our industry is now growing into, that are less commission driven and they're more process driven. If you want repeatable business and you have the ability to be more efficient, innovative, then they're going to participate more. They're not going to be one and done. So if you can do that, we were recently working with a provider whose documents appear to be about 50% compared to others that we're working with. And that's a big deal. I mean, look at the transaction I just told you about, 1,000 pages, and if that's a lot of work, and just coordination along the way. If you can cut that in half, and that's 50% less legal review by their attorneys, 50% all of us reviewing the documents when they come back. So in a perfect dream world, which it's really going to come down to those of you that control your own capital, or you have a close enough relationship where you're not afraid you're going to lose your capital, is if you could kind of go back to what Colin said and say, what are the absolute, minimally viable product, what process, product, whatever that is, what do you need to feel confident that it's not redundant, as redundant can be, but what do you need to feel good about it? Would you have a lot more efficient tertiary transactions if all of us on the broker side, if a couple thousand policies every year were all the same documents so you could have more muscle memory reviewing them? And even if only a portion of the providers or funds agreed to do it, is that still better for you if 30% you have more efficiency? Those are, and what I hear most providers say to me is, John, it's too much work. We're not going to do that. I'm thinking, how much work are you wasting right now with staffing and resources and lost transactions? How many of those do you need to calculate before you understand this is actually good for us? So I'm hoping that someone takes the lead, because the rest will follow you, whether it's through DocuSign, document compression, whatever it is along the way. Response time, trust your providers, give them a gross bid. If you need to give them skin in the game to make sure they don't give it all away, then do that. But we shouldn't have to wait, 2 to 5 days, 3 to 4 times throughout a bidding process. And we'll get a lot more, transactional flow and a lot more repeat business. So if that can happen, I think sky's the limit. If not, it's going to be really tough for us to scale.
Cool. Well, before we wrap up here, I hope you won't mind if you indulge me very briefly with regards to the mat that Stephen mentioned at the beginning. Just in terms of a show of hands, could you raise your hand if you've used the mat either as a buyer or seller or been party to the transaction? Good stuff. I would say probably, what, about a third of the room, optimistically. For those of you that haven't and want to know more about it, please reach out to me and I can talk you through it. It's one example of standardization that we've managed to achieve. It is by no means a perfect document and obviously can be improved over time. It's meant to be a living document from that point of view, but the more insight from market participants, the better. I'd like to end on final comments from the three of you, starting with Amy and then Stephen, then John. Just in terms of what you would like to see of your peers in the room, and what you'd potentially like to see of both Lisa and Elsa in terms of activities that we can do.
So being in compliance, I'm going to take it up a level from here, and I work to ensure that Air Asset Management is running as a business, according to all of its policies, procedures, growing with infrastructure as we expand the business. And I use the SEC tenets of, having policies, educating employees, ensuring that we're good fiduciary stewards of our clients and putting our clients first. I think as an industry, if we all look at what are best practices for my business at this time, do we have them documented? Are we creating an industry where people want to work and things are clear, and that we are constantly seeking to find best practices within our own niches? That's kind of the viewpoint that I take from a regulatory perspective of, coming in and showing the SEC, we've got ESG policies, we use our valuation policy, here is the data. The more that we all look at, just continuously improving, it addresses, legacy industry perception issues, and, it helps us all to grow into an industry that really is seeking to have best practices in every aspect of what we're doing.
Fantastic, thank you.
I guess for me, my point would be we're all in a business where we optimally are being served by the law of large numbers, right? You want to have a big enough portfolio of policies so that you follow the math. I think the same is true in this regard with, with the industry as operators, which is if we can standardize whether we actually, and this is the next panel about the documents, but whether we standardize our procedures as a group, I think there's power in that, agreeing this is what your checklist is of what you need. And if we all work together to figure out what that is and standardize that, I think that's going to help us all in the long run.
I would just say, just kind of going back to, we need to make this easy for those that are participating. It doesn't matter how much we cover our bases, as if it all rolls uphill to the investor. We just want to make sure that they're being taken care of and protected. Let's figure out what the minimal amount of documents that can do that. 'Cause there's going to be a problem, there's a problem. But what's the bare minimum? Because if not, we become less relevant as a solution to seniors and to advisors if we can't compress the time frame to a couple months max versus 3 to 6 months sometimes. So from gathering information in the beginning to compressing bidding time frames, and then of course the transactional, the actual documents. How many of you have received a document, or anything, and it was so cumbersome that it just stalled you? Well, that's what's happening, and we're all business people. So if we can do that, I could tell you that from talking with other brokers, most of our policy supply is up somewhere between 20 to 30% right now compared to a few months ago. And so we're all just forcing ourselves just quickly, how can we screen to see what qualifies and match expectations of the consumer to where our market is today. So I would say a hope for the future is also in that beginning part of our story. How can we really effectively sift through those law of large numbers that are going to really fit? Who will develop tools from longevity underwriting to other faster ways to price, things like that.
Fantastic. And that sort of leaves us today. I want to thank our panelists, Amy, Stephen, and John. I want to thank Montage Financial for sponsoring this session, and pass over to Sherry, Dan, and Brian. Thank you.
Thank you, guys. We're going to quickly transition. I want to add for Sherry to come on up, Sherry Duarte with this fifth season, Dan Ullman from Welcome Funds, Brian Casey with Locklord to come on up, and as well as Samantha Butcher from Abacus, please. As you come up, if everyone else wants to stand up for 1 second and just stretch legs, we're in our final session here today, and we appreciate everybody sticking around for a discussion on secondary contract standardization. So thank you. We got 4 chairs. Awesome. Pull the mic over a little bit, but it will work.
Okay, I think so.
Welcome.
Or, no. Huh?
I think you got it.
We'll
It's been picking it up.
We're not afraid of each other. COVID one. Yeah,
If you want to
exactly.
go, we'll have mics if you want to go out to the audience. Thanks.
That's a different meeting. Is that it? All right. Well, I think a lot was covered in this last session, so we can probably just pick up from there. This session's really supposed to focus on figuring out a way to standardize the life settlement actual closing package, the contracts. In doing so, really having to get buy-in from all providers to do that, because as everyone knows, right, these contracts are filed by state, right, and every state has different regulations, and the contracts are very different. In a perfect world, it would be great if all the providers would get together, with legal, with Brian Casey, and input from everyone, and really draft up state-by-state contracts, right, and then everyone file at the same time. That would be, like I said, a perfect world. We're obviously not there, so this really is just to talk about what we can do, what we should do, what people want to see, to try to work towards that. Like John said, you get a contract, that Dan will get a contract for this same offer, may come in from Abacus and from Q, but Abacus's contracts might be, I don't know, 35 pages, and another provider might have 200, right? Offers the same, what do you do? I mean, so things like that. So we're going to try to talk about all that and go from there. The first question, as someone had mentioned, what do the consumers want to see, right? So you're talking to seniors, going through the process with them. Are they afraid of these big, huge stacks of contracts? Or is it an easy process? Does it really not matter to them? As long as they hit that number, do they care that they're signing 50 pages as opposed to 1,000?
No, absolutely. They absolutely care. When our team packages the contracts up, plus the additional documents and disclosures that we're required to add in there, I mean, some of these contracts could be 300 pages total, with disclosures, with carrier forms, each week, and we also too try to break it up per signer to make it a little faster. But at the end of the day, they're getting a phone book. An 80-year-old person's getting a phone book, so are their 3 children who are the trustees. So we get that phone call right away. Do I really need to sign all this? And the whole process then becomes convoluted. And it's just trying to do conference calls with everybody to try to mitigate their issues. We organize a notary to meet each party where they can, but still at the end of the day, it's about size. A lot of the seniors are trying to read through it themselves, so that can delay 2 to 3 weeks before they can even get through everything. And that's with us also pre-filling a lot of the information that we confirm up front on the applications and the other information so that they can just review it, complete it, and move forward. But it's an absolute issue.
So you're saying size matters?
Yeah.
Does it affect the actual timing of the closing as
Oh,
well?
yeah.
So if it's a smaller contract, like if Abacus comes to you and theirs is,
Sure,
30 pages as opposed to 1,000, do you close faster?
Well, and that's the thing too, is the client's attorneys, the client's financial planners, everybody's reviewing the same package to look at it and see what's in there. And certainly if there's 30 pages to review, there's a lot less questions. There's a lot less, where do I sign? What do I need to do to move forward? So it is a situation where it matters. I mean, it matters significantly. So, I mean, we joked a little bit on the call that, we were part of the standardization of contracts years ago, and we've been talking about this, I think, for 20 years plus in this industry. Yes. I was part of a working group, I don't know, 5-10 years ago, and the only thing that we could agree on was margins and font size. Shrink it, open the margins up, shrink the font size, get a HIPAA to 1 page versus 3 with that particular group's contracts at the time. But I think something needs to be done because, again, as the previous panel talked about, there's a lot of differences between the buyer's contracts, and somehow we've got to come to a consensus on what's important, what's the risk, and how do we mitigate that risk for the industry while keeping it friendly for the consumer to do.
You make an excellent point that these are consumer contracts, but the legacy of our industry would not really embrace that, okay? To Stephen Shapiro's earlier point, I think, and I'm as guilty as the next person, you've got deal people and finance lawyers that created the original set of the other John Collins and I that Portsmouth really did in 1996. I mean, we were doing...
Yours are still being used, by the way, the 1,000-page
Yeah, look,
contract.
I mean, you learn, obviously, every day, and, we were doing some spitballing back then. Okay, what's important? There was no tertiary market. We actually had a loan on that portfolio, which was rare, but the lender really didn't do much due diligence, so we didn't really know exactly what we were looking for in a best practices contract. Now, all of that said, this is not a complicated contract, okay? What's the object? A policy, purchase price, some basic reps and warranties, some closing conditions, some covenants that would survive pre-closing and post-closing, a termination clause, and what you folks like to call boilerplate, right? So 7 or 8 sections that should be able to be condensed. And when we've gone through the exercise of helping some clients do direct-to-consumer, we were kind of forced to relook at some of the, a lot of redundancies, right, admittedly, in a lot of these contracts. And along the last 20 years too, if you went to a consumer finance lawyer, they would write these things in a little more plain English, just like the Securities and Exchange Commission has moved in terms of, you know, IPOs and public offering documents. A much different style of writing. Now, you haven't seen the, interestingly, insurance industry move towards that style of writing, whether it's a homeowner's policy or a life insurance policy. And if you take a step back and go, gee, are life insurance policies themselves standardized? Well, not really, right? Yes, they've got all the incontestability clause and the basic clauses that the statutes that were passed in 1970 require, but they all have their name, accumulator this, and, you know, whatever they want to call it. But even those policy forms are not standardized. So the whole, if you want to put us as part of the insurance industry, we're part of that. Now, that all having been said, you know, in the last 15 years, the NAIC has, with the help of the states, developed an interstate compact, which is a filing system for states that sign up for it, and most of them have, for life and health and disability, not property casualty. So you file your forms, your policy forms, with this compact, and it's basically the NAIC behind the scenes, right, that's doing all this. And you can get approved in, you know, 50 states, or however many members there are, in a matter of 30 days. So we should try to do something like that. Now, one idea, I think we talked about a little bit on the pre-calls, you know, could we get the compact to embrace our product? Be a big step, because they're insurance products now that's on there. And I was thinking too, it would help force the regulators understand our contracts a little better, and, you know, what's good, what works, and why we need changes when we do. And at the end of the day, I agree with the other John Collins, the taller one, that we're trying to serve the, you know, the investors at the end of the day and what's important. And I think when I first started working on these contracts, I put them into 3 buckets. Okay, there's the got-to-have contracts, a life settlement contract and an escrow agreement, right, that are in effect mandated by law. Then you have the strongly recommend documents, not always contracts, but a death authorization to get a death certificate, right, for example. Things you need as a practical matter, or that the investor or tertiary markets are going to demand. And then there's the nice to have, but maybe not necessary to have. You guys might debate me on this, but do I need to go get a consent and acknowledgement form from every child of a parent, where hubby owned the policy, wifey poo was the insured, but the kids were never beneficiaries?
Depends on what fund you ask.
Sure, and I'm all for taking plaintiffs off the table, but then that becomes a workflow process. I mean, that's not necessarily a standard. We could make them standardized, of course, but I think to your point about the prior session, there's the workflow and there's the documents, and to the extent we can get standardized documents, that would help everybody.
Now, Samantha, your contracts are not the 1,000-page contracts, correct?
Correct. Correct, yeah.
Now, would you be, I mean, and you've just recently, I think, did yours, right? I mean, Florida was a big win, and you had to create new contracts there. Would you, as a provider, be willing to say, okay, yes, if we all agree, we all get in the room, we put the work in to try to create a standardized set of contracts, and everyone can have their add-ins, but just the base level? Is that something that you would actually consider taking and then refiling?
Yeah, I mean, obviously, it would be a lot of work, right? You're having to go to each state, and sometimes you're actually having to teach them about our industry and what the forms are. And, you know, part of the process can be difficult for Dan because it is 200 pages. But, you know, I feel as though that's not going to fully solve our issue of trying to standardize this process, as John Mendelson said, and trying to streamline this. But yeah, I mean, if we as a group, like he said, there's the ones that we need, that every buyer, provider, fund is going to want, and then there are the ones that are nice to have. But as a provider, I am representing my fund, and what I want is to eliminate as much risk for them as possible, right? So there are going to be those forms that I want in there, but the question is do those forms have to be 10 pages or 1 page?
And do they have to be filed, is the bigger question. Brian?
Yes. Contracts have to be filed. The statutes are worded a little queerly, and disclosures need to be filed. It doesn't even say consumer disclosure, it just says disclosure. So we get in silly fights sometimes with an a department over HIPAA forms. A, they don't quite understand. It's federally preempted. They're looking at the statute that's really a Gramm-Leach-Bliley statute that says you got to get renewal of the form every 2 years. Well, that's not getting data from a physician, that's getting data from the carrier, that form. So they're all confused on that. And so the question is, what is a disclosure? Not every piece of paper that's in your suite of documents, my view, is not a disclosure. Like the authorization to get a death certificate, right? I wouldn't call that a disclosure, so no need to file it.
And what about some of the talk about the process, right? You've got some buyers out there that will say, you know, chain of title's very, very important. We need to have everything, right? But let's say the trust is from like 1972. Obviously, they're not finding, and it's lost. No one can find it. You can verify from the carrier that they have no access to it either. There are some funds will say, okay, well, we'll just do a trust affidavit. There'll be some that will just walk away from the deal 100% completely. After going through everything, you've signed everything, everything comes back, the deal is dead. Is that really a risk, Brian?
That's a business call at the end of the day. But yeah, I kind of come down on the side that that's a risk. If you can't validate, it's the owner, right? The trustee. I mean, if you can't validate the organic creation of the entity that purports to be the seller, notwithstanding the carrier records, I think there's a risk there.
Well, and you know, talking about the disclosures, you know, as far as things that need to be filed, you know, and as an association, you know, is it possible for us to create a standard set of disclosures for all states? You know, if you've got, you know, in the statutes, you know, the disclosures might be 1 through 12, right? In Florida, in other states, 1 through 8. But what are the ones that are the same? You know, are there ones that are the same? Maybe those are a general one there, and then the balance of it would be in Alaska, these additional ones. You know, and have one set of disclosures for, you know, for everything. You know, and that way it's, and maybe Lisa, you know, potentially would speak to the regulators to be able to say, hey, we're doing this as an association to make sure the consumer has a set of disclosures. You know, and obviously, you know, without adding more paperwork to the package, but does that help, you know, to provide some type of standardization if that's the form that really has to be filed? Is that something that we could do, you know, as a group? And obviously, the previous group talked about the electronic signatures. I mean, that's a win. You know, if any fund, any provider would agree going forward that you know that they could live with that type of signing and that type of disclosure, you know, all online. I mean, you're talking about, you know, taking something that really is an impossible transaction. I mean, my grandmother, who obviously is dead now, so it'd be hard for her to complete, but some of these 200-page packages, you know, you're talking about, you know, clicking a few buttons as they go, making sure they understand, making sure they've had a chance to review it for a week or two, and then literally almost doing a table closing, because at the end of the day, everything else is already done. Maybe you can even, you know, set up a call with the provider to do a verbal VOC with the carrier at that moment, you know, with the owner, that they're doing the clicking of the button. And that way you can kind of speed through that process as well and try to help standardize that closing.
Do you do electronic signatures?
Well, when you talk about electronic signature, I mean, as far as the length of the contracts, whether you're doing electronic signature or I'm sending a notary to the house, they're still reviewing 200, 1,000, 35, right? So I do think shortening the length of the contracts could be important, right, for them from a review perspective. The online notary, DocuSign, all of that we've talked about today is very, I mean, yes, we've looked at it, we've done some. It's very state basis with the online notary. So I think we can definitely look into that, but I think shortening the contracts eliminates your issue of having to review the documents. But try having an 85-year-old get on Zoom and answer, you know, 5 questions about what color their car was 10 years ago. It's difficult, right? And, you know, working with funds, they want that. They want to know, how did I authenticate this signature? What did they go through? And DocuSign has great aspects to it to authenticate it, but you know, unless the 85-year-old can go through that process, heck, I failed it once, right? So we just need to be aware of that when trying to standardize that process of it.
Well, we can definitely standardize the contracts, and we just need to get a call to action to get that done. One obvious impediment, however, and it was part of the discussion yesterday in the Industry Affairs Committee, is that we got to get rid of the V word, right? That's one of the big differences. You got to call it a viatical settlement in these states, and you call it a life settlement in these states. And correct me if I'm wrong, but usually you want both the policyholder and the insured, if they're two different people or one's an entity, to be parties to that. So instead of just a simple drafting example, instead of repeating the policyholder and the insured 100 times, you just define it as one collective term, you know, the policy persons or whatever you want to call it. So you certainly can shorten the language. And as I mentioned earlier, I still think there's a lot of redundancies, like repping and warranting insurable interest 5 times, right, in a contract. You don't need to do that.
Yeah, I mean, if 3 sections down to 1, you know, it makes a big deal.
And then you're always going to have the skirmishes with the DOIs, arbitration clauses, right? For example, I'm an advocate of that for many kind of contracts like this, just to keep it out of the public domain. And there are state arbitration acts in most states that say, okay, the following 10 contracts you cannot put an arbitration clause in, one of which is an insurance policy, like a homeowner's policy or an auto policy or a life insurance policy. But our product is not insurance. But they latch onto that because they view a life settlement service, I would call it, as somehow being insurance, which it's not. Or if they're smart enough to figure out they're wrong on that, they're going to wave their wand where they can deny a contract provision based on public policy grounds, like we don't think it's in the best interest, anti-consumer essentially. To which my response is, well, your legislature sure as hell thinks arbitration's pretty good, which is why you have an Arbitration Act. And then the practical question is, you know, are you guys going to pay me, you know, $20,000 to go fight that issue? Is that important? And so you cave on it. So you got to kind of navigate around those issues. But it would be great to have standardized arbitration clauses, for example.
Absolutely.
What was the one state that we worked on?
Virginia.
It took forever.
Yeah.
What was and we just caved in the end.
Well, they were rejecting the HIPAA form, saying you got to go get it renewed every 2 years.
Right.
And, you know, we have an expiration when the guy dies, basically, yeah. But that's all about education of regulators. Yeah.
That we did not fight.
We did not fight, no.
Too hard. All right, so that's what the consumer want. The brokers, we've talked about it. And then the funders, right? So if this is something that we are going to do, it's really making sure that everyone, all the members, right? So it's not just, you know, a subcommittee. I don't see this as just a subcommittee. I think if we really want to do this and if it's really going to be impactful and helpful, every member needs to be involved and needs to have a voice. You know, and it's not us saying, okay, well, we should just focus on A, B, C, and D. It's okay. To the membership, what do you want to see? What are the requirements? What can you live with? What can you not live with? Could you take care of some of your requirements through an affidavit or after the closing process? Right? So it's not just the providers that have to get involved or just the brokers. It's the industry as a whole. We all need a voice. We all need to have input before. This isn't a project that can be done. I mean, like Dan said, it's something that's been talked about for 2 decades. We need to continue the conversation, but also figure out a way to see if we can move it forward. Yes, we need the buy-in from all of the providers, but before even getting to the provider, we need to see what it would look like and how much work would it entail and what needs to be done. And the only way to figure that out is that everybody gets involved.
And I think a recent example, it was your instinctive instructions to me, was with these estate cases, right? Sherry says, well, why don't we go draft a clause, right? And maybe we can make it a standardized clause, which I did, and no one's ever.
I think Stephen at Q Capital would love to talk to you about that.
Okay.
He would use it.
Yeah. Now, whether it's enforceable or, you know, to the extent of its enforceability is a different issue. But yes, when we have industry developments, we should be more proactive and jump on making changes to the contract where it's appropriate.
And that was just with everything, all the lawsuits with COSA, I just had called him. I said, is there a way to put in the secondary contract that will eventually be a tertiary contract to kind of offset what he's doing out there? Nothing's bulletproof, but just to have something built into the contract, just an extra layer of protection. That's what Brian's talking about. So we've talked about standardized calls. What about uniformity with the requirements, like, you know, the VOCs, the VOC requirements and the verbal VOC requirement, right? I think everyone seems to have something a little bit different. Is there any way to kind of pull it all together where everyone can just agree on this is really, truly all we really need? We do not need to ask 50 questions. This is really...
Yeah, no, and I think a lot of the stuff, the base one, what came from the NAIC years ago, which, you know, still, you know, the beneficiary's not on the original document, so everybody's kind of manipulated that over the years, and, you know, you've got some people that again, shrank the font size and, you know, fit a lot more questions on a lot of the pages. But, you know, I think, you know, again, it really kind of comes back to what a fund will accept as well, you know, written form versus verbal, number one, and obviously, you know, how quickly can you get that done, you know, on a recorded call. But at the end of the day, you know, we have to realize as an industry, you know, we're still competing with the carriers for their time, and they want us to take up less and less. They want their consumers to take up less and less of their reps' times. You know, whether it's in the United States, in India, in the Philippines, wherever they're sending that call, the last thing they want to do is sit there on the phone for 35, 40 minutes with us and the consumer, you know, grilling them with these questions that they may or may not have immediate access to. And the other thing too is a lot of the documents that the carriers have are not the original documents. You know, as the policy keeps getting transferred to a servicer, to another servicer, to another servicer, you know, some of them can't even produce the premium history. So I mean, it's a pretty significant challenge that we've got to look at as the customer service side gets worse for all these carriers.
Yeah, I mean, I think VOCs are super important, right? But they don't need to be 20 plus questions, right? We want to make sure the policy's enforced. We want to make sure no one has any liens on it, assignments on it, and we want to make sure the person who's selling the policy owns it at the carrier. The problem lies, you know, a lot of times the reps can't answer the questions or don't know the answers, or let me find that answer for you. I need that request in writing. I can't tell you over the phone, right? So then an easy call turns into 3 or 4 calls later. You know, the verbal VOCs are now more of the standard. When I started, it was all written, no verbals. But the time the carriers are taking to give you a written is now cutting into, you know, the closing time frame that's daunting to the consumer. So, you know, as a buyer, we will do the verbal VOCs, but I need to make sure the information I'm getting is accurate. And to be honest, I've had verbal VOCs that I've bought with information that has been wrong. And again, that's a risk as a buyer that you take. But yes, they can be shortened. You know, you don't need probably as much information as being asked. But again, it's trusting that the information you're getting is correct and lines up with all the other documents that you've gotten through the closing process.
And also, I mean, maybe to state the obvious, which I've been known to do, you know, you look around at other industries. Okay, I mean, the mortgage loan industry, that's a whole, you know, kind of different kettle of fish, and there's the federal government that's kind of behind those things, but they're all going into the secondary market, and they're all getting securitized, and by and large, you know, mortgage loan, residential at least, are pretty standardized, 10, 11 pages maybe. And totally electronic, yep. And then if you look at the venture capital industry, okay, they have an association, the Venture Capital Association of America, whatever it's called, and they have developed term sheets and preferred stock purchase agreements that industry, and that's a very diverse industry too, right? Every VC thinks their stuff is, you know, the best. But they came together. They've got a good suite of documents. You know, I use them, or, you know, I get a term sheet and go, shit, what's missing? Let me go look and see what the standard one, right? And not to plagiarize, but that's why it's there. So it's very useful. So we can do this in this industry.
What would it take?
It takes, you know,
Brian writing them.
some people to step up.
You say village, the village.
Brian's going to write them.
Well, look, I know there's a lot of people in here that enjoy writing forms and dealing, including you two. So we would expect and need critical business input from all the different stakeholders, because it will bleed into the workflow, bigger picture, and get just like we did the map. Get some people that are interested, float it out there, get buy-in, and then let's go test drive it.
Yeah, I mean, I don't think it would be difficult to do. It would be, you know, tedious to then go to every state, right, and do it. But I think that, you know, from a buying perspective, that's not, the standardizing of the contracts is not something that would concern me. It's all the other stuff, making sure we're still getting all the due diligence outside of the, you know, the standard 1 through 10 forms, right? But I do think a lot of these documents don't need to be multiple redundancy of saying the same thing 5 different ways.
And I think the state regulators would embrace that. You know, I mean, that way they're not, you know, when they do a file review during the market conduct studies, you know, they know what they're looking at. You know,
other boxes to tick.
check that box, move on to the next one. You know, and I think that's, you know, that's important for them and their councils, obviously their time on reviewing, you know, every new provider's documents or a slight change, you know, months and months and months of that time too.
And I don't recall who were all the trailblazers on the RDB retained death benefit stuff, but those were contracts, you know, that were avant-garde to the DOIs at the time and had to take a lot of hand-holding.
We want to open it up?
Yeah, sure.
To questions? Comments?
One SIG page?
We have one signature page for the entire contract.
Yeah. So the question is, can you replace, you know, the 25 places for signature that you currently have in your forms with a single signature? If you could get it by the regulators, yes. In fact, we do that in the electronic world, even with life insurance policies, applications. We say through the electronic, the process of getting consent for the customer to do an electronic signature, that this signature will be applied in 5 different places. You click once, or however you're doing your e-sig, and it's disclosed up front, and the consumer is consenting to that up front. So in theory, yes, you could do that.
Even on forms that may be going, like a death certificate release or a HIPAA.
Yeah, that's.
Well, that's a different issue. I mean, when you've got e-cigs, you can't control the rest of the world on some third party and whether they'll rely upon it, right? Mm-hmm. Just like a physician relying on a HIPAA. So you're always going to have that business risk because you can't force them to rely on e-cigs.
Stephen?
Can you hear me? Yeah, there we go. I'm just going to ask the question since I brought it up on the last panel. Again, if we're going for collectability and saleability, if those are the goals, we're never going to anticipate everything that we can, right? Litigation happens, as Sherry mentioned. We've talked about this new provision about kind of this current approach that Cozen's been taking. Can you, is it looked, if you're in court and you say, well, okay, this was the standard of the industry that was adopted by all of its top players through its trade association, does that help you in court? Because we know we're never going to anticipate everything. And the question is, if we all follow kind of a standardized package, does that help, or is that argument no good, worthless?
It would help slightly if there was a need for a witness who's an expert witness that can say this is standard industry practice, whatever the issue might be. Yes, it would not hurt and could be helpful.
Okay, thanks.
Okay.
Dan, you work with the same advisor for a couple of years, and he gets different sets of contracts.
Mm-hmm.
What kind of
Usually laughter. And it's interesting because and a lot of the guys, the agents will review these things themselves, and their staff will review it as well, just to make sure that there's no errors or typos or anything. But we do get a lot of questions from them, from hey, well, I remember on the last set of documents there was a the indemnification was 2 pages long. Am I seeing this right? The indemnification on this one is one or two sentences. Because obviously things that they want to look at and things that are different. But yeah, I mean it's like I said, it's usually is there anything we can do about this? Can we get this waived? Can we get that waived? Can we get this waived? And believe me, to the providers that when we call you, we've already fielded those questions 10 or 15 times. From the agent regarding the individual documents and why do I need that? But sometimes they want to press us, to the point where we do have to ask. Again, we're doing it for, general. This is how the industry operates. This is how a broker operates. This is how a provider operates. This is what the fund needs. But still, at the end of the day, that divorce decree from 1992, and a policy was written in 2000. They and the clients, before they ask the client for that, they want to make sure, do I really need to ask this question and open that can of worms? So.
What does your closing department look like? I mean, do you have one closer for every provider? So they master just that one contract, or are you guys just
no, we do it.
there
Yeah,
with a...
No, we do it all. Every one of the closing, we have 3 people in the closing area. We want to make sure, obviously, if people are on vacation, that that everything's covered and everybody's knowledgeable on every buyer's documents to the best we can. But that way, if a client calls, someone's able to get their response back to them quickly, so that they can move on with the next question or the next item. But they're working on forms all day long. They're working on missing items, VOCs. It's kind of a, and again, it'll vary per buyer. It's not just, hey, you're set with, this 200-page contract, and you're only getting these 30 pagers over here. But this way, everybody's kind of that expert. So we want to make sure that everything can be handled quickly.
Any other questions, comments?
I got one for Sam.
When he said asking to get it waived, I looked at Sherry. I said, I hate hearing that question. When I was listening to Dan, we're talking about standardizing contracts, right? But the but our industry is not standard, right? Every case is different. It's owned by one, it could be owned by 5. It could have gone through 5 owners since issue. You could have a divorce, a bankruptcy, right? So when we talk about standardizing contracts, that's great, but it's all the other things that we have to go through. And I know Amy talked about it earlier as the fund, the end goal is, will we be able to collect the death benefit at time of death, and we need to eliminate as much risk as possible in having to fight that fight or fight a spouse who didn't know her husband sold the policy, or a beneficiary who thought they were still the Benny of the policy and didn't know that their mom took them off a year prior, right? So we're constantly managing that risk, and I think if anyone in this room was going to spend $3 million on an asset, they'd want to make sure they're going to get their $10 million when they die, right? So I would push the question back. Would you buy this asset knowing this would be your risk? Would you waive it if you were the end buyer? Have you explained why we need it, right? And a lot of times I'll get on the phone with a broker or an advisor and say, this is my risk. Do you agree with this risk? And, because at the end of the day, if something happens, we're all a party to this transaction. Dan's a party, I'm a party,
Jane and John Doe.
Yeah,
List them all.
yeah.
Figure them out.
Whoever's involved is a party. So we're trying to minimize or mitigate any risk for all parties involved. So I'm protecting you, Dan, as much as myself or my fund. So at the end of the day, I don't like hearing those words. And a lot of the times, Scott will say, there's a lot of ways to get around it, but let's just have a conversation about why it's needed and how we get to the finish line as quickly as possible.
So Sam, you're telling us there's a chance? Getting it right?
I didn't hear what he said. It sounded very muffled. I didn't hear what you said.
You said so you're saying there's a chance?
Oh, maybe. Depends on who's asking. Probably not you. Not for you, Rob.
Well, and, one of the other questions I have too, just I guess this would be for the room and the industry. I mean, is there a general set of affidavits that could cover divorce decrees?
We heard no about the trust affidavit, so.
Wow.
we
I'm
got
not
that.
using those anymore.
Yeah. But like
I've
for
never
missing
used that.
documentation or something that's so old that the person says, hey, my ex-spouse has no rights in this whatsoever. I don't even remember what county I got divorced in 30 years ago, 35 years ago. But is there something for like missing documents, like an affidavit that would be, something that could be created?
I mean, ask the buyers, right? I mean, I wouldn't feel comfortable not having that at the trust. Casey obviously was my attorney, so.
Well, and we've done more cases in the last probably 5 years with no trusts, either non-signed versions, no trust. They lost in a fire. Obviously we're at that age now. I guess a lot of us that the people that are selling their policies, their attorneys retired or died 20 years ago, so there's no backup copies, of anything. The carrier doesn't have them or won't release it. So what do they do?
You put it out there to the buyers. What do you all think about affidavits, and what would you feel comfortable with and not? I mean, it's not so much a provider-broker question. It's at the end of the day, it's the buyer who ultimately is holding the asset. So, anyone want to?
And you have an agreeable party in the policy owner to sign an affidavit, and to say that they know it was this person and they're taking that liability on by signing the affidavit.
No one wants to. No one that wants to.
It's opinion, so my attorney's opinion might be one thing, will show what we think should be on that affidavit to the fund attorney, who that wants to. Two different opinions, so I don't want to standardize one thing for all of the different types of scenarios you might run into. But even with a single scenario, you can have two different attorneys, and what is the joke for you?
Right. It's case by case, right? Like you've done, surprised that you've closed cases without the trust. I've never purchased a case.
Yeah. Well, and that's the thing is,
unless I had it, right? So, and there are some. I mean, I know one attorney that who educated me from the very, very beginning, who will say, no, you just need the trust affidavit. And then I've got another one who says, no, Sherry, you actually, you need to really make sure there's no risk. You need that trust, right? So, I mean, I guess Cindy's right. Every fund is different, right? And it changes, right?
Sure.
Like today I might not, I want the trust. Maybe tomorrow I don't. And that's not true because it's recorded. I will always want the trust. But the divorce decree, that's, Brian, you're up here. What do you think about that? I mean, it was 30 years ago, right? Is that really an issue?
Well, take a step back. Some of this is anecdotal, but of all the types of lawsuits that have arisen after a life settlement policy, if you take all the Stoli stuff off the table, right, and this new estate thing, how often does it happen? And usually it's a divorce thing, right?
It is, yeah.
So that's my answer.
Any other questions or comments? Are we all in agreement, though, to move this forward, that everyone has to participate? Or we just stop talking about it because it has, I mean,
It's
Dan's
been
right,
20
it's
years.
been 20 years, so either we're just gonna continue sucking it up, or we're actually.
Either we
gonna
do it, I'm going to
something
do it for you and
actionable.
put a copyright on it, and you'll have to come see me on it.
There you go. That would work too. All right, well, thank you.
Well, thank you. Thank you to Sam, Sherry, Brian, and Dan, and thank you to all of our speakers today. And thank you as well to our audience and everyone here for participating all day today in our sessions. We have one more thing to do here, and that is to have a really fun party down at the College Football Hall of Fame. It's going to start at 4 o'clock. We have buses that are on its way or should already be here. They'll be starting to leave at 3:30, but I believe that we're going to get everybody into the buses on the way out, so it's not a kind of rotating thing. So make sure you're there by 3:30 to get on the buses. We'll make our way down to the Hall of Fame. All the instructions on what to do will be there. If you do have some luggage or bags, I believe there's some space there to put that if you're leaving later this evening. But we hope to see everybody there. I don't think I'm missing any other notes here, but I just really appreciate everyone coming down to Atlanta and looking forward to a good time this evening. So thanks.